Now, if we take a look at the holdings, uh, it's I've invested 5,700 for 58.89 right now in the account, with so a bit of profit. Passive income is going nice. If we look at some of the worst performing ones, it's been related to crypto. No surprise there. So blocks have been performing poorly as far as the NAV, and Ethereum as well. But I did receive some decent amounts of money that are not uh, over here, but you can see it here that instead of 24% with the money I've received, I got around 13%. HBTE is already up 9% since I bought it yesterday. And there's also, where is it? Circle. I'm up 15% since last week because I bought it at the very dip. So it's been going quite well so far. What's going on, guys? This is episode 6 of the Snowball Experiment, where I invest weekly into covered call ETFs just to generate income in order to pay for some traveling once a year. My goal with this series is to help some friends of mine to get started with investing, and especially get them addicted to the income that the investments that they will make generates. And hopefully I can help a few people along the way on YouTube as well if you're just starting out into investing. Of course, none of this is financial advice. It's just me recording myself. So let's get started with crypto in general. I'll explain a little bit what I'm seeing in the markets and the way I invest right now for this experiment. So crypto dove quite a bit. From this high over here, it went down as much as 30 something percent, 36, 37% from high to low. I took this opportunity to buy two stocks, two ETFs in the covered call space. And we're going to go over my strategy right now. So this is Bitcoin versus the US dollar in a log chart. So I'll put it into a regular chart to show just how much the dump was aggressive. My strategy is that I will be buying at every $10,000 increment, as you can see from this rectangle over here with different colors. Over here we have an important support that I'll be watching. I might add a bit more aggressively at this point, but right now I've added into the $80,000 area when last week when the Bitcoin price went a bit lower than the 90,000 threshold. And I'll permit myself to buy 3 or 4 assets at every in $300 increments in the snowball experiment at every $10,000 rectangle that gets reached. So basically, if it keeps going lower, I'll be allowed to buy more of the same stock, $300, and then I'll wait for price to go up or down, and then at every time the rectangle will be reached, I'll be adding to my positions. And the reason I'm doing this is because I want to make sure that I have a good size position for the next cycle up. I don't know if this is going to go down to 30K. I don't know if it's going to go up to 300K. I have no idea. All I know is that right now it's at a discounted price. And there was a big announcement from Vanguard, which have been kind of last to the race in the crypto space, to offer to their clients crypto exposure. And this alone brought around $1 billion in the first day or something like that. Don't quote me on this, but needless to say, Vanguard putting their stamp of approval on crypto in general, I think will be positive in the medium to long term. But all I know is that I want to have some exposure in that account to around 20 to 25% of the account. But I will be using various instruments, not just Bitcoin, not just Ethereum. I'll go into detail about what I'll be buying. So last week I bought Circle. but a covered call of Circle. And the reason I did this is because Circle had an IPO recently. It spiked up quite aggressively, and now it retraced completely to the opening of the IPO. IPO means initial price offering. It's basically when a stock goes into an exchange where it is publicly traded. And I figured this might offer an opportunity to have a support near that low. So I purchased 300 something dollars. We'll look at the account in a few. So what I purchased is CRCY. It's Harvest Circle Enhanced High Income Shares ETF. It's listed in Canada, but I'm sure there are many US-based covered call ETFs of Circle. So this is the one that I purchased in the account. If we take a look now at the holdings in the account, we have CRCY over here at 6.32%. But if we look at the yield, which is very interesting, it has a 54% yield. So that jacked up the yield of the entire account to 25%. Generating currently $1,500 of annual income or $126 a month. Right now, I don't like the fact that the most of the income is coming from GDXY. 39% of it is coming from there, so that's a big chunk. So I'm trying to invest into a few covered calls that are a bit more aggressive as far as the distributions. And the second one that I bought just yesterday, it's HBTE, which is Bitcoin leaders into the sphere. So basically crypto miners and companies that are basically around the crypto sphere. So I thought this would be interesting to add, and I'll show you why in just a second. As you can see here, HBTE has a dividend yield of 26%, really close to 27. But if we look at the annual payout, like how much money each is bringing in, we can see here that Circle is making some progress in the account to diversify a bit the most of the money that comes in. So Circle here, HBT here, this one is $82. I could increase my position over the next few months in order to compete a bit with GDXY. So I have a bit less of reliance on this, because if ever gold starts to go lower, I expect this to have a NAV erosion pretty aggressively, and then the income will be going down a lot. I don't think gold in the next few years will go down much, but it's a possibility, so I need to prepare for that with diversification. Since we're on the topic of the account, right now I'm beating the S&P by about 6% over the past 3 months. There's been some periods where it was much higher, and it went down a bit, the performance versus the S&P. Now it's starting to pick up again, but what I'm gathering from this is that I have more leverage than the S&P, so I expect the performance to be worse when the global market starts to turn around. So I'm going to try to combat that with some aggressive buying of defensive assets in the next few months. Like utilities and like oil related ETFs. And also I'll try to tone down a bit on the AI front and technology in general, as it seems to be the story is that it seems to be slowing down and it's overpriced. So I have some of it in Biggie and into HHIS. Although I don't know if I have bought it in this account, but I'm starting to slow down as far as investing into AI, and I'm going a bit more into defensive assets like precious metals and base materials. I do believe, however, that right now is an opportunity for me to buy a bit of crypto 30% off. So I will be buying that, even though it adds some volatility to the portfolio. But I think over the next few months, I'll try to solidify everything so that I don't have much NAV erosion, and I can profit from cycles into other sectors that haven't been very popular. So let's take a look quickly at the holdings. So I invested 5,700 for 5,800, $182 of profits, around 25% passive income, but this wobbles a lot from week to week. This is very volatile, but I'm above 20%, that's for sure. As far as the ones that have been performing the best, I've got SWBI, which is performing its duty really well. This is a low yielding one in the 5%, but it's just a regular dividend stock that I bought because I figured that it was at the bottom of the cycle. I'll show you that later on, but it's been spiking today especially, and it's right now the best performing one, followed by Circle, which I purchased last week at the very bottom. So this was a good buy. JebQ has been performing well as well. And HBTE, which I bought yesterday, is already up 9%. HHIC, which is Canadian High Income Shares, is doing well. And the worst performing ones are Ethereum and blocks, which are crypto related. You can see here that because I received some income, it's not as bad, but it's an opportunity perhaps to cost average into that position in the next few weeks or months. We'll see how it goes, but I have other options for that. Switching gears, we can see here that I have gathered a few of the covered call ETFs that are related to Bitcoin. These more or less follow the same path, as you can see. I'm noticing here that the blue line, which is EBIT, and seems to be a bit spiking more than the other ones. And even in the downturns, it seems to be holding a bit better. So that's an option for sure. But what I want to show you here is that the reason I bought HBTE and blocks is because it seems to be holding a little bit better when it comes to overall performance, including the dividends. This is blocks' performance, including the dividends. So we're still in positive territory if we use max data out of all of these. And then HBTE is even more volatile. This one is on the Canadian market, but this one has performed the best overall. So even though right now crypto is in a dump because of the income that it generates, it has been positive, 31% overall, even though the market is down 30%. So for me, that's a very interesting way to diversify into crypto assets and try to generate some income out of that. There is a downside to it. If you look at the, or actually, let's take the very top of the market over here. Let me zoom in. The downside is that it's going to go down more than the rest of them in a down market. So right now, it's the worst performing one, and blocks is not too far either. But I'm willing to stomach the volatility if overall I'm beating the market per se. As far as the holding of HBTE, you can see here it has Robinhood, Coinbase, Irene, Block, MicroStrategy, some IBIT in there, Galaxy, Cypher, Riot, Core. There's 16 holdings, Terwolf, Mara Holdings. So these are crypto mining companies, basically. So this provides a bit more spike, if you will, a bit more leverage to Bitcoin. So I like that a lot. So I'll be building a position in that account to over $1,000 in the next few months, most likely. I have much more than that into other accounts. But I wanted to share this with you guys if you're interested in getting some exposure to crypto, and you're able with your broker to access Canadian companies. So to sum it up, I'm expecting some lower prices from here still. It's a definite possibility. And if it does, I'll buy more. I'll cost average and I'll expect some type of rebound eventually. It might take a year, 2 years, 4 years, I don't know. But I'll be paid in dividends meanwhile. And as it turns around, if it does turn around, then I'll have a really good yield on cost and I'll be really well positioned in that sector. But I will still keep adding into other more defensive sectors. If I see opportunities elsewhere, I'll keep adding. So I'll keep you updated and you'll see the dividends growing and the account grow as well, which is my goal, to show you that it's possible. You just need to be consistent. So if that content is useful to you, hit the like button, subscribe to the channel, and I'll see you in the next video.